You know those storage units you rented when moving? What if they paid you monthly cash forever? This tiny $5 stock owns 13 of them and spits out 5.8% dividends. Stick around, I'm breaking down if it's actually worth your money in 2026. Really quick, before we get into it, I want to put out a disclaimer that I'm not telling you guys to buy the stock nor to sell it or tell you what to do with it. This video is mainly just for education and you guys make your own decisions when investing. But before we get into it, be sure to subscribe to the channel and yeah, we'll dive right in. Global Self Storage, ticker symbol SELF, is a tiny company owning and operating 13 self-storage spots. Their whole thing is handling the rentals, keeping sites secure and clean, collecting rent from regular people, and paying out most earnings as dividends to shareholders like you and me. It's straightforward passive income from a need that's always there. I'm gonna walk you through the day-to-day operations, what works great and what doesn't, and if this underrated gem is worth your money in 2026. Stick with me. Nobody else is really covering these under-the-radar dividend stocks like this. So let's get into what Global Self Storage actually does. Picture this. Instead of you buying one storage unit and dealing with the tenants yourself, you buy a share of SELF and own a tiny piece of 13 full storage facilities, big buildings packed with hundreds or thousands of individual units each. Total rentable space is around 967,000 square feet spread across 8 states: Connecticut, Illinois, Indiana, New York, Ohio, Oklahoma, Pennsylvania, and South Carolina. These aren't fancy high-rises. They're straightforward spots where regular people and small businesses rent out space for extra stuff like furniture during a move, holiday decorations, business inventory, whatever. Day to day, the company handles everything so shareholders don't have to. Customers go online or to the site to rent a unit. Super easy with their website and app. A small team of about 33 employees manage the properties. They clean units when needed, handle security with cameras and gates, fix locks or lights, collect monthly rent payments, and deal with any customer questions. No massive corporate overhead. They're self-managed, meaning no outside firm takes a big cut. All that rent money comes in after paying for payroll, maintenance, utilities, insurance, and a bit kept for operations. They send most of it out as dividends because they're a REIT. That means by law they have to pay at least 90% of taxable profits to shareholders like us. Right now, that's about 5.77 yield on the $5 share price with quarterly checks of around 7 cents per share. It's passive income from something boring but always in demand. People never stop needing extra space. So now the big question is SELF worth investing in during 2026? Let's break down the good, the bad, and my real opinion. Pros. First, the dividend is solid. About 5.8% yield right now, paying 29 cents a year per share, split into quarterly checks of around 7 cents a share. That's way better than most savings accounts or even some big name stocks, and they've been kept consistent for years. Self-storage demand is super steady. People always need space for moves, extra junk, or business stuff, even in tough times. The company is small and low drama. Low beta means it doesn't swing wild with the market and no massive debt issues. Plus, analysts see some upside price targets around $6 to $6.50, which could mean 20 to 30% gains if things go right, maybe from buying more properties slowly. Cons. Growth is limited. This is a tiny company, 57 million market cap, so no huge expansions overnight. Revenue's been flattish lately, around 1 to 3% bumps, and the high payout means they don't keep much cash to grow fast. Price over earnings is higher, around 31 to 32, so it's not cheap on earnings. As a micro cap, it can be volatile if big investors sell, and if interest rates stay weird, small REITs feel it. My take: if you're like me, hunting reliable dividends without wanting landlord headaches, SELF fits great as a small piece of a portfolio. It's boring but pays you to hold, and that passive income adds up. Not a moonshot stock, but for steady cash cash in 2026? Yeah, I consider adding some. Not advice, always do your own homework, but it's one of those under the radar plays that could quietly work for dividend investors. All right, that's global self-storage in a nutshell. A tiny company turning everyday storage needs into steady 5.8% dividends without you lifting a finger. Boring? Yeah. Reliable passive income? Absolutely. If you're building that dividend stream like I am, this could be a quiet winner for 2026. If this helped you spot the under the radar play, smash that like button, subscribe so you don't miss the next one, and drop a comment. What stock should I cover next? Also, if you're not on Robinhood yet, sign up through my link in the description. You get a free stock that could be worth $500 to $200, and it helps support the channel. Not financial advice, just sharing what I'm looking at. Thanks for watching, and I'll catch you guys in the next one.